Hello and welcome to this new video. Today, I'll be explaining Chipotle Mexican Grill stock and its relation to the stock split, as well as the potential impacts it could have. Then we'll dive into my specific price targets and how investors and traders can benefit from them. Let's get started. And a warm welcome to this new video. Let's begin with the latest news. Chipotle Mexican Grill, abbreviated as CMG, announced on Tuesday that there will be a 50-to-1 stock split, meaning for every share owned, shareholders will receive 49 additional shares, and the average price would be around $60. This is set to be decided on June 6th in the meeting, and we could expect a stock split, which in my opinion, will positively influence the market. I'll delve into that shortly, but before we do, I want to highlight the important financial data and future prospects of the company to get an approximate valuation. CMG operates in the fast casual restaurant market, which was valued at $124.5 billion in 2022, with estimates projecting it to reach $337.8 billion by 2032, nearly tripling in value. This indicates an annual growth rate of 10%, which is quite substantial. It's estimated that the fastest growing region will be the Asia-Pacific due to the expanding middle class, and CMG isn't well positioned in this region yet. They have the majority of their restaurants in the USA, Mexico, Canada, and a bit in Europe, but there's still a lack of stability in Asia, which could pose a challenge. Chipotle needs to establish a presence in Asia as soon as possible before competitors do. Now let's examine the general financial data. The stock is currently valued at approximately $2,900, with its fair value being $1,800. I'd estimate it to be between $1,800 and $2,000 in the coming years. However, in a good correction scenario, the stock could drop to around $1,500, which would be considered undervalued. Now, looking at the ratios, the price-to-earnings ratio is quite high at 64.8 for a restaurant, and the price-to-sales ratio and price-to-book ratio are also trending upwards, which could be concerning. Now, let's compare them with some competitors and their average valuations. I've selected 4 competitors: Starbucks, McDonald's, Yum Brands, and Restaurant Brands International. The average is around 23, also influenced by Chipotle Mexican Grill. Most fall between 20 and 23. I'm hesitant to evaluate the stock due to its significant growth. In my opinion, the fair PE ratio would be around 30 to 40, roughly a third lower than current levels. This would be a fair valuation for many large investors in my view. That was a brief comparison with competitors. Revenue has surged, especially during the pandemic, with a continuing boom compared to companies like PayPal. Cash flow has increased significantly, and even net income and cash flow are equal to 2023 levels. The company operates quite efficiently, and overall, things look good. However, when comparing revenue to the sector's revenue, Chipotle Mexican Grill holds only a 10% market share, indicating they don't have a dominant market position like Meta or Alphabet. Their market position is around 10%. Now let's look at the stock's future prospects. In 2023, they experienced growth of 14.3%. The 2-year forecasts are 13.7% and 13.2%, which I find critical. To maintain the stock's value, they would need at least 16% growth, and to avoid overvaluation, they'd need at least 18% growth. However, as we can see, that's not the case, and it will impact the stock in the next 9 to 15 months if they fail to exceed expectations. I want to briefly touch on the CEO, who has been in position since 2018. In 2018, CMG was worth $400 per share, and now it's around $2,900. He has multiplied it 7-fold, which is very impressive and demonstrates his experience as a CEO. Now let me show you something interesting. It displays the largest investors. Recognizable names include Vanguard, BlackRock, and State Street. Capital World investors may not be as well known, but they also hold a significant portion of the company. There are also investment banks like JP Morgan. Vanguard holds nearly 10% of the company, and BlackRock holds 5%. We can also see the type of investor, whether they are more long-term or short-term oriented. Vanguard is invested with its investment advisor and hedge fund. Now let's look at one of the most famous hedge fund managers of our time, Bill Ackman. You've probably heard of him. He's one of the best hedge fund managers of our time. He has a very concentrated portfolio allocation, with only 7 stocks, counting both Alphabet shares as one position. Alphabet is actually his largest position, accounting for around 18.5% of his portfolio when combining Alphabet C and Alphabet A shares. But what's important for us is that Bill Ackman reduced his position in Chipotle Mexican Grill by around 13.5% this quarter. So he himself sees that it has run up a bit, and I agree. Those who have been invested in CMG for a while can certainly take profits. They are sitting on substantial gains. But CMG is also very interesting for traders because the price movement in these months could become more volatile due to the stock split. Now I'll show you my target zones. As we can see here, the stock is expected to continue rising. I believe we'll see a turnaround between 3,000 and 3,800. The stock will probably reach the $3,400 mark, which we expect in the next 2 months. Then we'll see a correction, where a short position could yield significant profits. If someone wants to short it, they could expect a profit of 30%. A 30% short position would first outperform the market. That much is clear. In my opinion, this is not financial advice. I would use CFDs because the stock is quite large, and if not, I would consider setting a future. CMG isn't so volatile, so it's worth considering. It wouldn't, for example, go with a hype. If I say I'm shorting at $3,400, it won't jump to $3,800 overnight. It would be quite good for short traders. I won't do it, but after the correction, I'll buy the position. For this YouTube channel, I've created a YouTube portfolio where I'll demonstrate from the beginning, with a challenge until the end, how to build a proper portfolio with my help. The first video will be released in the next few days. I'll buy real stocks and I'll make it as realistic as possible. Of course, you can trade with derivatives or with more or less capital. It's up to you. Don't forget to subscribe. I don't think it's a good stock for the next 5 years, but it's quite interesting for the medium term, say 1 to 2 years. Then we'll experience a correction. I'm not sure what could trigger it, but I could imagine, for example, Bill Ackman selling more, and the stock becoming much more volatile due to the slight increase. Before we experience the major correction, we could see a percentage increase of 81%. That's just an estimate. We don't know for sure. However, we can expect at least an 81% short-term increase. So I estimate the increase will take about 1.5 years. Roughly speaking, we could expect a 50% increase from June to the end of the year. I would consider the stock quite safe in expansion, but I find it unlikely because the indicators and financial situation don't look so good. We could expect a 110% increase in expansion. It's a matter of comparing the structure and financial data and weighing which is more likely. You can find everything about stock finances, crypto, commodities, index analysis, and macroeconomic events with us. Our goal is for our viewers not to blindly trust us, but to make their own decisions with our help. This channel is suitable for investors of all kinds, including traders. In our old videos, we were able to reach all price zones. So, subscribe to the channel if you want more videos about different investors or individual stocks. We analyze more than 800 assets. I hope I was able to explain the stock well. Until next time.